Welcome back. Today we are going to pull apart a single trading session and examine it almost frame by frame. The date is February 21st, 2026. And on this day, COMEX silver futures staged what can only be described as a textbook explosive rally, moving roughly 9% from the recent base, touching a session high of around $81.82 per ounce after opening near 78.47s. Gold, meanwhile, was holding above the $5,100 level. These are extraordinary numbers by any historical measure, and today we walk through why this happened, what the charts are telling us, and how it is reflecting on our domestic MCX market in real time. This is purely an observational and educational breakdown. We are studying price behavior, not directing anyone on what to do with their money. Let us start with the chart setup. On the COMEX daily candle going into February 24th, silver had been building a base just under $78 after a sharp correction from the $103 all-time high hit in late January. Pull up that chart right now. You can see the intraday low on February 21st printed at $77.28. That was the shakeout zone. Anyone watching this in real time would have noticed that sellers showed up hard at the open but simply could not sustain the pressure. Within the first couple of hours, price reversed and started climbing. By mid-session, the momentum was clearly one-directional. The session high came in at $81.82, a $4.54 swing on the intraday candle alone. When you extend the move from the previous week's closing levels and include the overnight Globex session, the total range expansion from the base registers closer to that 9% figure. That kind of range expansion is not noise. It is a signal that something structural is happening beneath the surface. Now, let us bring up the MCX screen recording. Silver on MCX today was trading in sync with the global move. In rupee terms, the contract was showing significant upside after having weathered a dramatic correction since the budget day crash on February 1st, when MCX silver plunged to near 66,000 rupees per kilogram. The recovery since that event has been gradual but consistent, and today's COMEX rally is providing the international tailwind MCX needed. Notice on the MCX daily chart how volume has been building over the past 3 sessions. A market beginning to wake up from its correction. So what caused this session-level explosion? Let us break it into layers, because there's never just one answer in commodity markets. The first layer is physical delivery pressure at COMEX itself. The March 2026 silver contract first notice day is approaching. February 27th is just 6 days away. Open interest in that contract is running well above the registered and eligible silver sitting in COMEX vaults. Market observers have documented for weeks that registered stocks have declined sharply and eligible stocks have not been converting at the pace needed. When the math between open interest and available physical metal gets tight, the market historically does one thing. It prices that scarcity in sharply and suddenly. The second layer is geopolitical. Since January 1st of this year, China implemented new export restrictions on refined silver. Only state-approved companies with a minimum annual production capacity of at least 80 metric tons can now export, and only with specific government licensing. Since China controls somewhere between 60 and 70% of global refined silver supply, this policy shift has been systematically tightening the amount of physical metal available to global buyers. February 24th appears to be a session where markets collectively recalibrated to account for the downstream effects of those restrictions on March delivery availability. The third layer is macro. Gold is above $5,100 today. When gold makes a strong move, silver historically follows, but silver tends to move faster and more violently due to its smaller, thinner market. With the Federal Reserve still holding rates at the 3.50 to 3.75% range, real interest rates remain relatively contained, an environment that historically supports precious metals. The dollar has also been under mild but persistent selling pressure, which amplifies moves when denominated in USD. The fourth layer is structural industrial demand. It is worth noting how different this rally is in character compared to historical spikes. The 1980 Hunt Brothers squeeze was pure leverage speculation. The 2011 surge was a post-crisis risk sentiment overflow. The 2021 Reddit squeeze was social media driven and lasted days. What we are watching in 2026 is genuinely different. Solar energy is consuming an estimated 200 million ounces of silver per year. The EV sector adds another 70 to 75 million ounces annually. The inelastic industrial demand base is absorbing metal at a pace that mine supply simply cannot match. Now back to today's price action. After the high of $81.82 was set on COMEX, the market began to consolidate in the upper range, rather than reversing aggressively. That is technically significant. On the MCX intraday chart, you can observe similar behavior, a sharp initial move followed by sideways digestion in the upper range. Markets that hold their gains after large moves are absorbing, not distributing. Gold's behavior today is also worth noting. At $500 per ounce, gold is at record territory. The gold to silver ratio, how many ounces of silver it takes to buy 1 ounce of gold, has been compressing steadily. Historically, extreme compression in this ratio has accompanied the most explosive phases of silver bull markets, and today's move is consistent with that pattern continuing. The broader observation here is this. Commodity markets like silver are a real-time vote on what the world values. When physical delivery becomes uncertain, when geopolitical supply chains fracture, and when industrial demand outpaces mine production by hundreds of millions of ounces annually, the price mechanism eventually and forcefully corrects that imbalance. What we observed on February 21st, 2026, is a market in the middle of discovering a new structural price level. Whether that process is complete, interrupted, or just beginning is something only the sessions ahead will answer. Study those candles carefully. The data is all there.